Dr. Raghuvanshi, MD and CEO, who now joins us to talk about what business looks like and what the outlook is. Dr. Raghuvanshi, congratulations. You've successfully turned the corner in literally just 5 years, where you've changed the face, the name of Fortis Healthcare from a loss-making entity struggling with identity crisis to now a profitable one that you're managing. Up until now, of course, everything was looking well until I realized that 2 weeks ago, in a very recent development, after trying very hard in the last few years, Agilus is back on the books of Fortis Healthcare. Your private equity investors are looking to check out. I know you are looking to list this part of your business, but haven't managed to do so. What does this do now? Have you gone back to the drawing room? Because up until now, the focus was to improve and increase the revenue contribution from hospitals. But now with Agilus back on the front for Fortis, what happens?
Thank you. Thank you for having me, and thank you for your kind words. The organization has some innate strength in it, and that is what has resulted in the recovery which we have seen in the last 5 years. Now, as far as when we come to Agilus, it's our contractual obligation to provide an exit to the 3 PEs, which is about 31% of Agilus. Fortis does own a significant amount of control over Agilus by owning 54%. So now we have to commit for sort of fulfill our commitment to buy back this. They have put the put option on us. We could not list it, and there were several reasons for it, mainly commercial. We felt that because of the brand change, we had to do a lot of marketing initiatives which were sort of lacking, and that resulted in suboptimal performance of the company for last one year or so. July last year was when we changed the branding. So we are in the process of completing this transaction. Of course, it is subject to the shareholder approval and other statutory approvals. Post that, we would want to consolidate this business. We believe that there is a lot of opportunity here, and there is a lot of work to be done in order to get the performance at the level of the industry peers. And we believe that the kind of presence, geographical presence Agilus has across the country, we can definitely create huge value for the shareholders over there. And that is what we are doing. At the same time, as you said, that the hospitals are our focus area. And we continue to expand on that front. Last year, for example, I will tell you that we spent about 890 crores on the hospital side in Capex for upgradation and additional Capex for adding beds, etc. And we will continue almost in the same quantum for next 3 years or so. So that funds are tied up with internal accruals. We will be able to achieve that growth in the beds. So we are not going to be affecting our hospital segment growth because of this acquisition of the remaining equity, which we are planning to do.
Dr. Raghuvanshi, thank you for simplifying that for me. But I mean, the pool of money is limited, and I believe you're going to have to shell out close to 1,500 crores to honor that put option from your private equity investors. First question: how do you plan to fund this stake buy or buyback that you're doing for Agilus? And second, while I said the pool of money is limited, does that mean that with this additional fundraise, there may be a little bit of a delay on the expansion in hospitals? I'm not saying that it won't happen, but I would imagine that would get pushed back a little bit, right? And also, how do you plan to fund this 1,500 crores?
Yes, absolutely. As you would see our balance sheet, we have a very healthy balance sheet. Our EBITDA to debt ratio is only 0.39. Net debt of only about 308 crores. So we have a huge ability to leverage, and we would definitely be doing this through a debt instrument, the acquisition of this Agilus equity, and that will not impact the other expansion which we have planned. As you might be aware that we had planned about 2,000 beds of brownfield expansion. So that is on stream. Most of the constructions are going on. And in next 3 years, we would see continuously about this year, we would see about 700 additional beds. But in the following years, we will see about 400 and then followed by a slightly higher number the following year. So that all is on track, and that will be mainly taken care of through internal accruals. Because of this, we have confidence because this is brownfield acquisition, brownfield expansion. So this would be capacity will be absorbed rather quickly and will yield kind of immediate returns and not like a greenfield facility. So we are pretty confident that the cash flows are robust enough to support the expansion of the hospital as well. Of course, if there is a large acquisition opportunity available on the hospital side, we will not shy from that because at that point of time, we could think of some kind of a fundraise.
Sir, in terms of now next steps, right, in this business, what can we expect from you? When can this deal be closed out with Agilus, A? B, I know that diagnostics is a tough business. We can't take that away. I know there is conversations that you would be looking at rebranding once this comes into your foray. It gives you a little more power to sort of move things around, re-strategize. Tell me what the plans are and how do you see it and how much do you see it contribute to your revenue? Not immediately, but over the next 2 to 3 years, because you've got to make good this like you have made good Fortis in the last 5 years.
Yes. So essentially, there are several operational things which we need to do compared to our peers. Our those spread is higher, but at the same time, our lab to the collection point ratio is slightly not very sort of the way we would like it to be. So a lot of rationalization on the operation side will be done. At the same time, we will have a lot of focus on specialized testing, especially genomics, etc. We have already got a division which is doing excellent work in that area, and we want to expand on the specialized testing. So we are not going to position ourselves as a run-of-the-mill kind of a diagnostic provider, but a specialized diagnostic provider which is addressing the needs of the clinical fraternity more than the wellness. Of course, wellness will always remain a significant part of the business, but essentially the focus would all be on specialized testing. At the same time, as far as the percentage of revenue for the overall consolidated revenue is concerned, we expect it to go to about 25% of the total revenue over the next 1 or 2 years.
That makes sense, rather than run-of-the-mill blood tests, etc. Dr. Raghuvanshi, good morning. This is Tamanna here, and good to speak with you after quite some time. Let me come just to your hospital business for a minute, because bulk of the revenues are also there. I think margins were a little squeezed in Q1 because of new hospitals. Give us the outlook here, your per bed revenues, as well as where you see this boost coming from.
Yes. So as far as hospitals are concerned, in the Q1, typically there is a seasonality and the revenues are usually low in the first quarter. So that's why if you compare the fourth quarter with the first quarter, there was only a growth of about 4% in terms of revenue. But if you compare to the last year, it was about 14% growth in revenue during this quarter, year on year. So we expect that trend to continue. Our occupancy in the first quarter was about 67%. We expect that to go up to 70% in the running quarter. And second quarter typically would be always better than the first quarter. That is our expectation. And since the occupancy numbers have gone up, we expect that this momentum will continue through the year as well.
In terms of some of the turmoil we've been seeing in Bangladesh, etc., have you seen any impact at all? I think a fair number of patients are also coming in from in and around India. What is the picture there?
Absolutely. The international business in India is largely from Bangladesh and, of course, the Africa and Middle East as well. So the Bangladesh business is certainly affected, but overall, in the larger scheme of things, only 8% of our revenue comes from international patients. And that is kind of a mix of all the CIS countries, Africa, and other parts of the world. So it has not been affected in a major way, but we are definitely seeing some degree of stress on the Bangladesh side of business. But I don't expect that to last very long. It is already sort of recovering. The communication transport is already resumed, and we don't expect that this will be a long-term thing. However, when we talk about international business, though in absolute terms it has grown, but in relative terms, our India business has grown more, and the percentage of international business has not really changed. It has remained about 8-9% over the years. So we expect that this going forward also it is going to be like that.
All right. Thank you so much, Dr. Raghuvanshi, for speaking with us. That's CEO and MD of Fortis Health, talking about the outlook and the current quarter, quarter two, expected to be better than quarter one, which is traditionally a little weaker for the hospital business.